Hello, everybody. It's Victor here from Trend Following Trading for Beginners, and here is my weekly update on my sample trading portfolio. Coming up next. Hi. Couple of episodes ago, I talked about portfolio management, and I also give at the end of the podcast give a list of I think 15 trades that I actually look after. I sort of trade on a daily basis, really, as a sample trading portfolio, and basically try to let you know how it actually works, how the trading portfolio is made up of, and what type of things that you should watch out for, and to give you an update. Here's what I will do from now on. Basically, every weekend. I will basically I do my weekly update anyway, personally, just for my own sake, for my trading routine. But I would also record a podcast where I just give you a brief taste of it, so that you can see more of how trading really works, or trend following trading really works, rather than just telling you set the rules or set the do's and don'ts. But there's not enough active examples out there. This weekly podcast basically will come on the weekends, which basically will tell you exactly how I go through my portfolio. Then tell you what I was seen over the week, and then basically go through my trading setup, and then talk about ifs and what are next things that you can learn. I have learned for trading, on what trade I made, and so forth. So here is what I've got. So I think 2 episodes ago, this 15 trades I'm actually looking after is basically spread across between shares, forex, index, and some commodity like crude oil and metal as well. So before I start, I think overall something that we can all learn about is that trend following doesn't really care about what the market is actually doing in general, except the price. So what I mean by that is like the market news, or the participants, what they have been saying, either publicly or whatever, from newspaper, also from any other podcast. I mean, the price of the share or whatever trading instrument you use is going to do its things, and it's made up of, from my point of view, a bunch of people in different markets, and because they're all human beings, some obviously is done by computers, algo trades, but they're all based on human patterns, building on people's trading experience. So out of all, it's basically just human trading, human emotion. And I always see that no matter what people say or what the market says, the price seems to always do something slightly different from what everybody's think about, and sometimes sort of quite contrary to everybody's worries. I mean, for examples, for like this couple of weeks, I think within the last month, we all heard that the U.S. Fed is going to provide more liquidity for the repo rates, which is a rate that banks charge each other for overnight lending. And I was quite confused because the Fed over here is talking about only to provide a temporary solution, so that like the last lender of means basically provide them some liquidity so banks can lend each other money, so to speak. So instead of banks lending each other, the Fed go lend the banks some money overnight just to time it over. But the word that they've been using or been reported is injection, cash injection. It's like they're actually doing QE again, basically, but through a different name. And they say it's not a QE thing; it's going to be just repo rate. But then you see the Fed's talking about the expansion of the balance sheets and stuff like that. And it's like, okay, they where did the money gone? Effectively buying treasury bills from the banks and then give the money, let the banks keep the money, so to speak, and then to do its stuff. I just found it very odd, but it also gave me a sense of like deja vu, because that's what sort of happened 2006, 2007 times, when the market was gyrating wildly up and down, down 700, up 600 next day, and moving everywhere, very volatile. And we didn't know what happens then. And then a few years later, then we know it's a prime market. They're doing all this CDI, CDO, kind of thing, whatever it is. The banks been betting on, and there's big holes that they've got themselves into, and they don't trust each other. Each other's banks, because they don't know what other banks have got and what bad stuff they got on their books, and they're not sure which different banks will be there tomorrow. So that's why they stop lending each other. So for me to actually see the repo rate actually gone through the roof, and then the basically Feds, the banks, as a means of last resort, will come out and start lending the banks money just to carry itself over the normal days of business or evening business, is very give me a warning bell as well. And also this is doing it at a time when the stock market is really high. Up, most of it. Like you look at Dow Jones, DAX, Nasdaq, or something. They're almost near the top of the trading range, and in the historical high. And then yet, we have U.S. Feds talking about reducing interest rate, which is already done once, and talking about probably doing one more this year, maybe two. End of October, maybe also in December. And also the US dollar index is topping. And all this going on in the background, obviously the trading war with China has been going on for about a year and a half, 2 years now. Also US are trading war with Europe. Recently about Boeing problems, basically is the EU subsidizing them, and basically there's some tax going on coming up soon, and between US and European countries, and those are not doing well, particularly to the market. And also, you look at which like myself, I track the Asian market a lot, and Hong Kong protests. It's been going on 5 months now, and then there's some new housing rule just come out from the local government to try to help people, buying houses and so forth. And the stock market supposed to have tanked, but it's not really tanking. It's just staying, about 26,000 area, 26,500, 700 area. And it's supposed to go down because I keep track of a lot of Asian news, and especially Hong Kong, of course, because I'm from Hong Kong Chinese, living in UK. The thing is, the protest has been going on because of 5 months now, and all of the shops are just didn't get much customers. A lot of tourism has gone down the pan, so to speak, because all this sporadic protests. People just don't want to go there to travel there to visit the place. So the hotels, the restaurants, and shops are really hurting a lot, and most likely some already talking about cutting jobs and so forth. And so is HSBC. They're already talking about taking 10,000 jobs worldwide, mostly because HSBC is a mainly Hong Kong-based, Asian-based company. Most likely Hong Kong will get hit pretty hard. So with all this going on in the background, and you look at the stock market, going back to Dow Jones, for example, it's nearly a historical high. Highest is 27,600 or something, around that area, and we are hovering around 27,000. Last Thursday and Friday, we just gone down a couple of £100, but still about the 26,000 area, 27,000 area. And it just makes you think, why is this up there with the U.S. interest rate going down? You see, maybe positive, but because of trade wars going between U.S. and China, everything is slowing down, and global growth is slowing down. European countries going down as well. It's not making it's not trading well, and China internally is not consuming as much as before. And you're just wondering where all this money come from that put the market up, popping the market up, so to speak. So it sort of like show you there's a way of trend following. with all this news behind the scene, so to speak, everything is supposed to go down, and I think that the market doing funny things. And as a trend follower, you don't really care all this political news or financial news, or you look at the price going up, then you follow. Price going down, you follow that too, or start shouting it. And so it's sort of like as a trend following, you just need to basically follow the trend. You don't care whatever other people say. So there is a saying that if you left in a desert island, and all you have is a couple of hours of internet per day, and you can basically trade from that. So long as you got good internet connection and computer and some charting software, or you can even use free charting software on the web, you can basically trade the market. And you don't have to trade, nothing against day trader, but you don't have to really sit down in front of a computer. 24 hours a day, just try to trade Forex or shares or whatever, or indices. And because you just follow the market, you don't care about any news as well. And you basically just trade that with your system, with a trend following system. And that is what I want to get across to people as well, that so long as you have a system that give you positive edge, that means, well, for let's say 1,000, 10,000 trades, you always end up with positive. You end up more than what you have. So you just basically continue trading, providing you have enough money left over. Continue to trade. You don't really care, how long it takes you to be really profitable, because the average of large numbers, that over large number of samples, you end up making money. That's exactly what the casino does. Each game that they put out there is not by accident. They put whatever games in the premises have a positive mathematical edge. Some larger than others, some smaller, but still positive for the casino. So long as they keep on having loads of customers going through the door, they will make money over thousands of trades. That's why there's like Las Vegas, look at Macau. They run out all this fun fairs and things and shows, building things very nice, running some other show that's boxing or singing or whatever things, get people there, to basically go through the door and give them some free chips to play with, and hopefully continue to play some more. So a lot of people keep on playing the game. Over time, the casino is going to make money, and that's exactly what you need to think about as well. Don't just think of, I didn't make money this trade, or next 10 trade, and you get really you mean the air letting out your body and just discouraged, so to speak. But like casino, they're doing thousands of trade possibly a day or per week kind of thing, and you need to think like that as well. Don't think of trading as only a 1 or 2 days game, or 1 month or 1 year. It should be, if you're really passionate about it or really want to trade, is from now until you die, so to speak, you will continue to trade. So if that is the time frame we talk about, then don't rush out and trade. Just follow the trade system. Your trading system, your trend following trading system might sometimes give you signals that make money. Sometimes it doesn't make money. But because if the system give you have a positive edge, over time you make money. Minimum a year, probably 3 to 5 years, you definitely see quite good return coming out. And remember, like in UK housing, I've done some analysis as well. I'm also a landlord myself in UK. In the old days, they talk about it. I did some calculation that every year, it's only got about 7 to 8% increase per year. Over a long time, every 7 or 8 years, your money double, so to speak. So you buy a house, 100 grand in about 7, 8 years. So long as you get 7 to 8% on average per year increase, then you will double your money in about 7, 8 years. That means like not every year you get 70%. Sometimes you get less of that. Sometimes you even get negative. Sometimes you get much more, like 10, 15% increase. But over time, if you do a long term, let's say 30 years, that kind of things for being a landlord and holding a house, so to speak, or even just buying your own first home over 30 years time, when you pay off your mortgage, your house, let's say you pay for 100,000, by the time you retire and things, it's probably worth 300-400 grand, and that's like an average increase, maybe about 5-6%, and that's how time help on your side will help you, so long as you keep on having a consistent 7-8% or 6%, then you actually will get there. So this is the type of thing you need to think about, take a long-term view. And so if you go into that mindset, I think you'll be much more successful. Now here's an update on the Apple thing now. The first one is Apple for my trade sample portfolio. Basically, Apple is something that I feel very frustrated personally, but the share price is saying going up and continue going up. So I say, okay, fine. I will just follow my system. But in the back of my mind, I don't really believe that up at all, because obviously China is the bigger consumer market, so is India. But China seems to spend more or willing to spend more money than the Indian on iPhones and iPhone products. And it's keep on going up and up. But obviously we all know China and US is having a trade war. And how the heck, the Apple share price continue to go up is really beyond me. But as far as I'm concerned, I'm into Apple as well myself. And short-term, both all this short-term, medium-term, long-term I buy. For me anyway, that is the 2 ATL system, the medium-term, which is the S2 system from the Turtles System 2 setup. And my 50 days over 200 days moving average system, which is more of the long-term things, all same buys. And that's a very good example, as in the bad backdrops of political going on. But then the price just do the reverse, because market sentiment, so to speak. And as far as you're concerned, you don't really care about market sentiment. You don't care about geopolitics, what's going on. All you care about is end of day trading. And you basically say, okay, the price of Apple is going up, so you basically just buy. And so all three systems are actually buy. And the other hand, if you look at Amazon, which is making loads of money too, so it's clouds, AWS stuff. As a software developer, a programmer, and also a designer, I know a little bit about it. I'm sort of self-learning myself on that. And as far as I know, Amazon has been, on AWS, making the clouds computing, making them loads of money. So is Microsoft. Now, I think Amazon and Microsoft are up there quite similar, making lots of money from there. But Amazon also obviously, they also sell lots of products from their websites. And then you look at it, in the short term, you look at share price, the short term is up, but the long term is a sell at the moment, because it's below 50 days or 200 days moving average. And the total S2 system say also neutral. So it's all like, on one share, you use different systems, you can actually see that it can be quite different, give you quite a different list of buy or sell signal, or basically stand aside. And personally, because, this just me basically, when I'm doing share trading things for pensions, for my own pension, I don't even use 2 ATL system at all. I sort of jumble in between S2 and my 50 days to over 200 day moving average. Most of the time I use the 50 days over 200 days moving average. Why? Because I want to take a long-term view. If the share price is going up, I basically buy it for my pension. So I couldn't actually buy Apple or Amazon because it's an American company. Basically, I can only buy some exchange fund that has those components in it. But like, let's say, ourselves, HSBC in UK, and it was going up, I buy them. Or Vodafone, I buy them. That kind of stuff. If it's going down, I just step aside, so to speak. So on the whole, I would say this. Apple and Amazon is just examples of some big caps in America. It could be any company that you look at, but this two really shows you that the price basically tells you what you need to do with your trading system. And next is basically I'm looking at USD against Australian dollar. The short term is a basically a buy at the moment, but both long-term, medium-term is neutral. So that's 250 days over 200 days moving average is, let's call it the moving average system is neutral at the moment. That is quite, I don't know, a bit sort of go hand in hand, the USD against the Aussie dollar versus the gold. They seem to go very similar. Simply because Aussie dollar is basically Australia is a more or less a commodity market. They have a lot of natural resource, mineral wise, and they sell a lot to China, and that seems to be the case. So when it goes going up or sideways, you seem to see Australian dollar going similar thing as well. So by whole and not just one thing I talk about portfolio management is you need to be careful what type of shares or number of constituents in your portfolio. They need to be less correlated as possible. So watch out because Australian dollar and gold are correlated, which I will talk about gold a bit later. But for the time being, it is short term is a buy, long medium term is a neutral. The other thing is against the backdrop of the trade war around the world and the lack of growth in Europe as well, around the world anyway. What I may have said, the crude oil and the Brent crude, they are basically more or less on the sell. On the short term, they both sell. Long term, they both sell. But on the Turtle S2 system, they are neutral. But I basically don't see that how it can go up anytime soon, or unless there's like Saudi Arabia somehow got some of their facilities got bombed by somebody. Or even the Iranian tanker that was reportedly being bombed or somehow some explosion that causes so one of the tankers spilled some oil in the sea. The price effect on that is really only a blip. That basically telling you there's a lot of sellers out there, or the market basically say not very good. For those the crude oil market, and there's a lot of sellers pressure out there, and for me I basically just stay short of those one. So, and it has been making me quite a bit of money early in the year because the short term has been really really good previously, and I was tracking it and looking at it and the curve wise, especially last year and end of last year and early this year. The price really, go up and down quite in a regular format. And basically, all the three systems was making me money on crude oil as well as U.S. crude. So, but only lately has been, been up and down quite a bit more volatile, so to speak. And that's what's actually going on. So that is my update on that one. The other one is basically next is DAX. Obviously, the European countries are not having too much growth, and Germany is obviously the head of the pack, so to speak. Germany and France and UK now talking about getting out Brexit, which has been going on for a couple of years, and that basically Germany have to pick up the slack where UK left off, so to speak, and France not doing particularly well. However, the price itself is still sort of very high, 12,600 ish, that kind of things, and it's near the all-time high. Around recent all-time high is about 13,500 ish. But it's at the moment it's about 12,600 ish, so it's less than 1,000 points. Obviously, there is European banks is cutting the interest rate to its negative interest rate and so forth. So where does all this money goes? They just basically all the money go to the stock market. But against the backdrop of the slow growth around the world, yet the stock market is still going up. So as far as we're concerned, we don't really care. We just look at the stock market and say, okay, what the price says, and the price says, oh, it's going up, so let's continue, and basically just buy that. So for the time being, all the three systems I have, the 2ATR, S2, and moving average system, all saying buy. But then if you look at down the Dow Jones, short and long term is a buy, but medium term is sort of neutral because of this volatility. One thing we need to know is trend following doesn't make money when the market going sideways. So S2, which is basically the Turtle System 2, methodology is really on the neutral here on auto index as well, because basically the trade itself is going, more or less sideways. There's some small movement up and down. You can make money out there for a short term, but there's not much of a long term long-term big movement at the moment. So at the moment, let's say, for example, you look at Dow Jones here, which I'm talking about, it's been on a sideways trend, more or less since April this year. And only at the start of year, end of last year, when the market tanked, and at early this year when the market sort of recover, that's a good trend. Actually make a lot of money. But for the last about 4 or 5 months or so, it's more like up and down, up and down. Short term, I make some money, but long term, you're not making anything because the market is basically going sideways. And that's one of the things that you need to remember, that trend following system doesn't make money when big money, when it's going sideways. And so this is exactly the type of things that you need to watch out for. But for the time being, both short-term and long-term, Dow Jones is still a buy, but in the medium term, it's sort of neutral at the moment. FTSE, on the other hand, the UK stock market is basically more or less going down. Short-term is down, so it's moving average system is down. So long-term is down as well, neutral. The S2 system say it's neutral in the medium term. That's another thing about trend following. Over time, if you look at a particular market, you realize that certain people, certain market attract certain people, and you see some market just going sideways a lot. And FTSE is one of those. It's maybe because the constituency of the actual 100 shares in FTSE, doing sideways a lot. So therefore, the whole index doing sideways. And to be honest, this is my own personal observation how to do analysis. The Turtle S2 system is not fantastic on the FTSE 100 shares index, but it seems the long term moving average and the short term seems to works fine. So for me, this is the thing. Even though I am presenting 3 systems, it doesn't really work for all shares, or stock market, or forex, or commodity, or something. Because simply maybe there's a lot of volatility there, basically sideways market like FTSE, and the trend following system just will not work. So on that front, I always piggyback on my long-term system. That's why I like long-term system best, because it gives room for the market to actually make some trends out of things. And for me anyway, I think from my past experience, I seem to be making more money out of my long-term trade than my short-term. So FTSE, this one basically tells me that there's certain type of people trading a certain market, and those type of people just don't, for some reason, always stay there. And then they manifest themselves, they activate themselves by the trades and the share price. And it's going a lot of sideways trades in FTSE. So over time you will see that, and you definitely need to watch out for that over time. It's because if that's not profitable for whatever your system is over a very long period of time, or even when you do some analysis like me, I'm using 20 years data and basically going through some software which I've written based on just turning this Turtle system into some code, and then run through with data that from my charting software that I can export, and that basically just runs through on spreadsheet. And I found that FTSE is not making too much money, but you only know that over time. So it's good that if you can turn your whatever steps, your system, your strategy into code, and then you can code basically backtest a lot of your data, and then you can basically find, okay, then if that system, let's say your system, whatever it is, let's say system A is sort of working on some index, but it's not good for forex, then you basically, okay, you probably may want to concentrate on index than using that system for forex, for example. So you need to find the strength of your system and the weaknesses of it. The weakness, you basically just don't trade on that area, just trade on where is strong at, so to speak. So that's the FTSE. The next bit is the gold. At the moment, it's more or less neutral because it's going sideways, but short term is a sell definitely, but long medium term is neutral. basically, this my personal view. I've been looking at the market and looking at charts and stuff. Obviously, a trend follower, I don't really care about the charts. I'm just looking at the market. But there's a funny feeling that all this uncertainty in the background. Why the gold haven't gone up yet? And then there's some news out there saying the gold has been holding by Russia and India and China, obviously. But then the price would be going up then if Chinese, Russians, and Indians are not selling. And why the price is still hovering around 14,000, 15,000 area, 1,400 area. And so you can see people, there's also talk about people manipulating the gold price or silver price, so to speak. So overall, sometimes it just feels that no matter whatever which is what I said earlier, geopolitical happening or whatever you think, if the price not going up, they basically just follow your price. But it was surprising that for me anyway, gold didn't go up. But who knows? It might go up and down next year a lot more, or coming down a lot more. I don't know. But basically, it's just something that I track. The next one I look at obviously is Hong Kong index. The Hang Seng. With all these products going on, I'm very surprised in going that in the tank. We're still hovering around, under 27,000, between 27 and 26,000. Just like Dow Jones, side market. And so for the short term, basically is because of reason, a recovery. Short term is a buy, but long term and medium term is neutral at the moment. But I won't be surprised something going to happen soon. I hope the Chinese government is not going to send in tanks in Hong Kong, or the U.S. not going to pass the law to change the status of Hong Kong or something, so restrict the cash money flow in that part of the world. But I keep watching the news from them myself. But I was quite surprised that the index didn't tank. But again, who knows? This is what trend falling is about. The share price saying short term is as a buy, long term, medium term is sideways, so do nothing, so neutral. So I just follow the system. Going back to the US, and it's Nasdaq at the moment, similar to Dow Jones. Short term and long term are both buys. Medium term is a bit of neutral at the moment. So we'll see how it goes on that side. Next is Nikkei, which I also track. Nikkei is a funny one. The Japanese market is heavily reliant on exports. Obviously, there's cars, electronics, and stuff. So with the backdrop of the market, overall market is slowing down. How the hell Nikkei is going up really, really strong? I mean, stuff is being helped recently by Japanese yen going down, against US dollar. It's weakening, so to speak, couple of yens. But, the Nikkei, it's basically going up. It's quite surprising. So across the board, short, medium, and long term is a buy. And this is another correlation, just like Aussie dollar with the gold. Nikkei, and it's because it's exports driven. And also the people borrow heavily on basically Japanese yen because it's hardly any rate and very cheaply borrow and then buy, let's say, US dollars and British pounds or something, that kind of thing, or some other currency or Aussie dollar. So the Japanese yen is really, really cheap at the moment, but it's quite correlated because of the stock market is the country, the economy is an export-led market. So when the Nikkei going up, you see the Japanese yen is basically weak, getting weaker and weaker. So against US dollar is basically going up and up and up because you hear the US dollar can buy a lot more yen, so to speak. So there's a correlation there. So when when I track these two market, the Nikkei and the Japanese yen, I always need to watch out for this correlation. It's quite highly coupled. Next is silver, just like gold, is sell at the moment for short term and neutral for medium term. and long term is also neutral. And the other I also look at, and two more forex one. Well, one is the Chinese yuan. The Chinese yuan is quite funny. It's quite an inverse of the US dollar, so to speak. So if the US dollar is strong, the Chinese yuan is going down. And basically, I think the Chinese people talking about the Chinese government is supporting the currency, the yuan, which it shouldn't be doing. Should let it free flow. But effectively, from what I heard, is the Chinese don't really want it to go down, the yuan to go down too much, so to speak, because a lot they have borrowed quite heavily, issue a lot of bonds and stuff. Some of the companies and U.S. dollars denomination. So the Chinese basically really don't want the yuan to actually go down too much. So if that's the case, the American government keep on saying the Chinese is manipulating the market, keeping the yuan relatively low. It's not the case. The Chinese is popping up on the reverse, popping up the Chinese yuan, so that they don't have to, when they have to repay a special corporation, repay all those bonds and in U.S. dollars term, so they don't. Those companies can still finance and pay back the money. If the yuan, Chinese yuan, go down too much, that means the Chinese company will have a bad time, worse time to actually make enough loads of money to pay back all those U.S. denomination bonds that they issued years ago. And so all this accusation from American government against the Chinese government about currency manipulation is not really the case. I mean, from what a lot of Chinese from Hong Kong, basically, or around Asia, they think if the Chinese government let the yuan go free flow, it probably going down to like 7.5 per US dollar, or 7.8, or even 8 or something. Some people talk about against the US dollar. So if you go down from more, it's definitely not in the Chinese government interest. So that's why they try to pop it up to around 7 at the moment now, because trade war, they give it down to like 7.2, around that area, 7.2. But I don't think they would really want it to go down to 7.5 or 8, that kind of area. And so Chinese really is not manipulating currency. In fact, they are popping up. They're trying to pop it up so they're not going to piss off the American too much. Also as well as for their own advantage, so to speak. And so all this politics going around the world is just beyond myself. But you see a payout in that stock market, in the forex, and it's quite funny actually can observe that. So for the Chinese yuan at the moment, it's basically a sell short term, long term, medium term is neutral. Last but not least is what I talked about before, Japanese yen. So similar to Nikkei, short term is a buy, but long term and medium term, funny enough, is neutral. So this is the type of things that I talk about. So sometimes Nikkei and US, the Japanese yen go high, in other times, in other domain, the short and long term domain don't seem to be the case. But overall, this week really is the Apple is across the street is a buy, DAX is a buy, and so is Nikkei across the board is buy. So hope you get some interesting ideas from this podcast for this particular episode. But basically, I would do this weekly update once a week. That's more or less what I do. But instead of about 15 trades in here, 15 different denomination instruments, I do normally about 40, 45. I track a lot of Americans one, as well as UK one, and a lot more other forex as well. But overall, these 15 give you a flavor of what type of things I look at, or what type of things I do on a daily basis. And I give sort of like a weekly update from now on, so try to give a bit more flavor on to my podcast. So instead of just keep on telling you, do this or do that, this is what I learned from my mistakes. Hopefully I get some other people onto my podcast soon. to actually share the experience, the good and bad and ugly. You guys can find a bit more interesting and more useful in the podcast. So hope you like this podcast. This time is rather different, but you should be able to see a lot more of this type of podcasting on a weekly, weekend basis. You see that from my podcast. So I will speak to you sometime next week then. So have a nice day. Good evening. Bye.